Today's video is on a REIT which is absolutely destroying the S&P 500 in total returns on a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11-year basis. For nearly all time periods, it doubled or tripled the S&P 500's returns. In today's video, I'm going to give you an analysis on a REIT central to 5G and the Internet of Things. I'll be going over growth, dividends, their business model, risk, debt, valuation, returns, and future directions. I'm also going to provide some data on 5G and the Internet of Things to help you better understand how to maximize your returns with these important trends. Before we get started, please hit the like button to get this video out to more people who are interested because these videos take me a ton of time to create. Also subscribe and hit the bell because I'm creating more videos for you every week. The first place to start is the business model. You should never invest in a company you do not understand, so I want to make sure you understand American Tower Corporation, ticker symbol AMT. What is American Tower Corporation? In their own words, they are a global provider of wireless communications infrastructure. They own and manage real estate on 5 continents and in 19 countries, which is central to telecommunications and will be extremely important in the developing 5G wave. As noted here, they own approximately 180,000 communication sites, 41,000 of which are in the US. That's a huge amount of land across the globe. Taking a look at this map here, you can see how many sites are located in each country. India stands out with around 75,000 sites. They provide a number of solutions and services to their customers, but the primary focus is their towers and antenna systems, which are needed for telecommunications. This image shows what their tower might look like. The main tower structure is owned and operated by American Tower. They also own and operate the land on which the tower is built. However, the antenna equipment, base station equipment, and so on are going to be supplied, operated, and maintained by their tenants. Tenants could be companies like AT&T and Verizon. The great thing for AMT is they can easily scale up the revenue on a single property. Looking at this chart, you can see that if they have additional tenants interested in a location, they can simply add more equipment and upgrades to the tower. They don't need to add more land, and the modifications are going to be fairly small relative to the amount they can charge for this. This table here breaks down the revenue. If they have one tenant on a tower, they're going to earn around $20,000 in revenue. Because of some expenses, their margin rate is 40% and the return on investment is only 3%. However, the more tenants they have, the more money they make. If they had 3 tenants, they're bringing in $80,000, have a gross margin rate of 83%, and a 24% return on investment. On a random side note, they have a variety of towers they use, but one of them is known as the stealth tower. Let's be honest for a moment, who doesn't want to invest in stealth towers? Before I break down the data on AMT for you, let's talk a bit about the direction of 5G and the Internet of Things, often referred to as IoT. 1G in the 1980s allowed for basic voice communication and nothing more. In the 1990s, we have 2G, which ran at around 64 kilobytes per second and allowed for improved voice, text, and voicemail. 3G in the 2000s finally allowed us to browse the internet at around 2 megabytes per second. 4G LTE, which began around 2010, bumped us up to 100 megabytes per second and allowed for mobile video and a lot more capacity for our mobile phones. Many are expecting the move to 5G to be an even bigger jump than it was to 4G. 5G will take it from 100 megabytes per second to up to 10 gigabytes per second, which is about 100 times faster. That huge boost in speed will allow the Internet of Things to further grow. The Internet of Things refers to the interconnection of a broad array of everyday objects which can send and receive messages through the Internet. Here we see some examples between security systems and smart grids, video surveillance, vending machines, mobile point of sale, vehicles, entertainment, and so on. Between 2019 and 2025, they are expecting the total Internet of Things traffic to grow at a compound annual growth rate of 45%, which is absolutely massive. The total number of devices will be nearly triple by 2025. These increased rates will allow for fully integrated smart cities, enhance augmented and virtual reality gaming, and allow cars to communicate rapidly with one another and other devices, allowing for safe and interconnected autonomous driving. 5G is an essential building block of the technological future. This means huge opportunity for investors who are investing in companies which are contributing to this. The average data usage per device for non-Internet of Things devices is expected to grow at 29% per year from 2019 to 2025. For the Internet of Things devices, it is expected to grow at 23% every year. This is a massive increase and will require significant infrastructure in place to support it. This huge increase is being boosted by our use of the internet over time. For comparison, sending an email takes about 0.02 megabytes. A 3-minute song takes 133 times more data and is around 2 megabytes. Going to the end, if you want to stream a 30-minute show on Netflix or Hulu, it's approximately 11,000 times more data than an email. Our society will continue to trend more toward higher and higher data needs. Companies like AMT will be there to support this demand and make a good profit from it. Between 2018 to 2024, they expect the US average monthly smartphone data usage will grow from 7.3 gigabytes to 40.3. That's nearly 600% and around 33% compound annual growth. France is expected to grow even faster at 36% annually, Brazil at 32% annually, and Mexico at 35% annually. This is something which will be growing across the globe for decades to come. Speaking of growth, 4G is still not dead and continues to grow. In fact, until 2025, the US is expected to have compound annual growth in mobile connected devices of 7%. The US monthly traffic and mobile connections in terms of gigabytes is expected to grow at a rate of 29% per year until 2025. US monthly mobile data traffic is expected to grow at 32% annually. These are massive numbers. AMT's customers are fairly diversified. 32% of revenue comes from international tenants, 13% comes from international pass-throughs, 19% comes from AT&T, 14% comes from Verizon, and smaller portions come from Sprint, T-Mobile, and other US customers. Adding to the stability of their revenue is the fact that their tenants are on long-term leases. In other words, we don't have to worry whether they will have customers next year. They have contracts which will last for many years, and 70% of their current contracts will not expire until 2024 or later. In fact, only 5% expire this year, most of which will likely be renewed. This gives us a lot more stability and confidence in future revenue. I mentioned earlier that AMT has been absolutely destroying the S&P 500 in terms of returns, but I want to show that to you now in numbers from fast graphs. On a 4-year basis, AMT's total annualized rate of return was 41.3%, well over double the S&P 500's 17.5% per year. In other words, if you had bought this stock 4 years ago, your investment increased by over 41% every single year on average. On a 5-year basis, it returned almost 29% compared to the S&P 500 8%, which is more than triple. At 6 years, it's again almost triple the S&P 500. At 7 years, it's still over double. At 8, it's over double. At 9, it's over double. And at 10, I'm ashamed to say it is still well ahead of the S&P 500, but not quite double. Going back to its all-time duration, it returned about 20% compared to the S&P 500 13. Now look again at how much $10,000 would have grown over this nearly 11-year time span. AMT was again close to doubling the investment returns of the S&P 500 with almost $43,000 compared to under $25,000. With dividends reinvested, AMT would pull even further ahead. Speaking of dividends, AMT has grown their dividends at a compound annual growth rate of nearly 23% annually, which is amazing growth. They have raised the dividend by at least 20% every year but one. AMT has been growing rapidly. Take a look at their numbers for the past decade. 16.2% revenue growth and almost 15% annual EBITDA growth. EBITDA is earnings before interest, taxes, depreciation, and amortization. They have 15% annual growth for AFFO, which stands for Adjusted Funds from Operations. AFFO is very important for a REIT like AMT. Although the growth for most companies is measured in terms of earnings, we do not do that for a real estate investment trust or REIT like AMT because of the way they are structured. Adjusted funds from operations are the financial performance measure primarily used for REITs. Last, look at ROIC. That stands for return on invested capital. This is the amount of return a company makes above the average cost it pays for its debt and capital equity. We want this to be as high as possible. Their ROIC is high and has grown while also growing the dividend. These are great signs of growth, and it is little surprise that this company has been destroying the S&P 500 in terms of capital appreciation. Now let's look at valuation on fast graphs. We're looking at adjusted funds from operations, or AFFO. Again, we're not using earnings to analyze this REIT. The dark green is the AFFO, which has grown at a rate of around 13% annually. If price in black traded at fair value, we would expect it to grow at the same pace as the green and follow that orange line. Because it is above the orange line, it shows that it's trading at a premium. In other words, it's more expensive. It was consistently above fair value, around a normal price to AFFO of around 21 or 22 up until the beginning of 2019. At that time, despite AFFO decreasing by 1%, the share price skyrocketed. Looking ahead, we can see that AFFO is projected to grow by 11% in 2021 and 2022. If it continues at its current valuation, we would expect around 11% returns for the next couple years. However, if the price to AFFO returns to its normal price to AFFO ratio of around 21 by the end of 2023, we would only see a total rate of return below 1%. Even though the company is expected to grow, because of the surge in share price, we would be buying high, and a return to normal valuations would mean weak returns even when including the dividends. You may question how accurate these forecasters are that we are relying on for these projections. That's a great question and we can check. This is the analyst scorecard, which shows how often and by how much analysts miss on AFFO. Impressively, they are quite accurate when predicting AMT. In 2019, they were exactly right. Since 2013, analysts underestimated their earnings by 2 to 5%, which is fairly minor. They overestimated by 0.2 to 2% twice. This is very small. In other words, based on their track record, I am confident in their future projections. If anything, they are likely to underestimate how well AMT will do by a few percent. We are looking at Fidelity's dividend information for AMT. A lot of new investors look at the payout ratio for REITs and get worried. The dividend payout ratio is over 100%. How will they be able to cover it? This looks bad. Remember again, for REITs, we don't look at earnings, we look at AFFO. This payout ratio is being calculated based on earnings. That's the wrong metric. Let's look at AFFO again on fast graphs. AFFO is what dividends are paid out of. Remember, AFFO is in the dark green. The white line is the dividend. The dark green is well above the white line, showing the dividends are easily covered by the AFFO. In fact, you can see here AMT pays out less than half of its AFFO in dividends, and they are thus safe with room to grow. Given the AFFO is expected to grow at about 11% annually, we should expect continued double-digit dividend growth. Let's take a look at AMT's profit margins and returns. Looking at margins, they are excellent. Gross margins are around 70% and at the 96th percentile. Margins for earnings before interest, taxes, and depreciation are around 60% and at the 79th percentile. The remaining margins are also above average. Looking down at returns, we again see great returns with the return on equity of almost 46% for the most recent quarter and at the 96th percentile. Return on assets and return on investment are around the 80th percentile for the industry when we compare AMT to its peers. This shows that they are efficient and profitable. Next, we look at debt. Why AMT? Why? You can see debt is truly massive. Long-term debt to equity is at almost 800%. Compare that to the industry average of under 200%. AMT is at the 95th percentile for its industry with this insane amount of debt. Total debt to assets is at 76% for the most recent quarter, which is again high and at the 89th percentile. Debt to capital and debt to equity are both at the 95th percentile. Debt to equity for the most recent quarter is at over 850%. Does that seem concerning? It should. So what should we look at next? Let's look at the current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. A ratio under 1 indicates that the company's debts due in a year or less are greater than its assets. We therefore want it to be 1 or higher. In this case, it's 0.48. This is not encouraging, although it is at the 49th percentile for the industry, which means this is typical for a REIT like AMT. Let's move to Finbox for the next portion of our analysis. This chart from Finbox shows the current ratio, in red, has been stable at its current level since March of 2018. The quick ratio is another measure of a company's ability to meet its short-term obligations with its most liquid assets. A result of 1 is considered to be the normal quick ratio. It indicates that the company is fully equipped with exactly enough assets to be instantly liquidated to pay off its current liabilities. We see this is now at 0.4, which has also been stable since March of 2018. In other words, neither looks favorable, yet the company has been operating below the preferred 1 since the chart data began and has continued to grow and succeed despite this. The interest coverage ratio is almost a 4. We want this to be at least a 2 to show it can cover debt, so this is favorable, and we can see on the chart that it is growing. Short-term debt coverage is over a 1, which does not give us much of a margin of safety. I would prefer to see this over 2. So what does this all tell us? It tells us that there is way too much debt and their ability to pay for it is hitting only minimum numbers that we want to see. What gives a little more confidence is simply their growing revenue in AFFO and the stability of their contracts. Similar to fast graphs' AFFO growth forecast of 11%, Finbox analysts expect 10% growth. Here again, we see when looking at AFFO that the dividend payout ratio is less than half. The AFFO should grow from just over $3 billion annually to over $5.5 billion by October of 2024. This will help with the debt. You may be wondering why they have so much debt. Part of this is their speed of expansion. Just within the last several years, AMT has rapidly expanded across tens of thousands of sites in France, Uganda, Kenya, Niger, Argentina, and Paraguay, among other countries. This costs an enormous amount of money. Further, the amount of capex, or capital expenditures, for these networks is enormous. For 2G to 3G, carrier investments were around $17 billion per year. For 3G, it was around $23 billion per year. For 4G, it has averaged $29 billion. For For 5G, it will be even higher. In other words, the industry is extremely expensive. AMT is taking on massive debt to stay ahead and beat out competitors and take advantage of a huge opportunity that will come with the Internet of Things and 5G. The question for you as an investor is whether that risk from the debt and rapid expansion and the recent rise in share price is worth your investment. AMT has had amazing historical returns and great growth. This is expected to continue. Is this enough for you to invest? That is a question for you alone to answer. Are you investing in AMT? What is your favorite 5G stock? Let me know in the comments below. Thank you so much for watching, and don't forget to subscribe. As always, good luck with your investing.